In this video, I'm going to show you how to recognize the high volume or fair price, also known as the point of control or POC. Macrograph vividly displays these high volume prices. And in this example, we're looking at the last 5 days of Apple. You can see that the color codes are noted just below the chart, as well as a spreadsheet that gives you all the data that are within this chart. So let's take a little closer look, get an idea how to recognize the high volume prices. As a market profiler, we all believe that time plus price equals value. The more time you spend at a price, the more value or volume is allowed to accumulate. This is how we could recognize the high volume price. The way you see it in a bell curve is simply the price that sticks out the furthest to the right on each bell curve. So for example, we're looking at on Monday here, you can see that the high volume price, which is noted down below here as 130.85, is shown here. That's the high volume price. And the time at price, or TAP, is the amount of half-hour periods that were spent that price was visited. And that is also shown in the spreadsheet below. And you can see this on every bell curve. There's the high volume price for the Tuesday, and that was 130.04. Then we go into Wednesday, Thursday, and there's Friday's high volume prices, and the amount of time spent at those prices also noted. If we wanted to look at this, let's say by a week or a month or any time period for that matter, it's the same principle. We're just going to count the amount of time that's spent on price. And in this example, we're looking at the same 5 days. They're only stacked on top of each other, and the high volume price here is noted as 130.34, and the time spent at that price was 22. So we you can see on Monday, Tuesday, Wednesday, and even Thursday we spent time at that high volume price. More time at price, more volume allowed to accumulate. So that's how you recognize a fair or high volume price, also known as the point of control.